So every time there is an inquiry made of a developer, it goes on your credit file. And so having a heap of credit inquiries, even though they may not have proceeded, can actually cause a bit of a red flag from the lender. They'll say, okay, what was this about?
You are listening to the Property Developer Podcast, your home for tips, ideas and inspiration to help take your developing to the next level. Now here's your host, Justin Getty.
Hello listener, and welcome to this episode of the Property Developer Podcast. It's great to have you with me. As I mentioned in the last show, today I'm speaking with a finance specialist about obtaining funding for your property development. Cash and funding are two of the bedrocks of developing, so getting a handle on them is crucial to your ongoing success. And having the right person or team to help you get that funding is obviously very, very important. I can only speak from experience about the hoops we had to jump through to get our construction finance, and how much help our finance specialist provided along the way. And that finance specialist is the person that I'm speaking with today. Gayle Stapleton is a former long-time ANZ bank executive turned developer's best friend, providing a specialist service on securing commercial loans. I sat in a meeting with Gayle and our lender and enjoyed her quizzing them on small but important details of our loan offer, and watching them raise eyebrows as they checked over the document, realising it might need correcting. That is an example of where having a specialist on your side pays off. In this conversation, we cover issues like common mistakes developers make when applying for funding, what the lender is looking for in your submission, and how to ensure you can continue receiving funding for your projects. I couldn't help but start off by asking Gayle what food she could eat until she was sick.
Oh, wow. Seafood.
Any particular type of seafood?
Love prawns. The prawns and fresh bread, delicious.
Oh, yeah. My brother-in-law once ate 100 oysters in a sitting.
Uh-huh. Wow. And they say the 13th one is the one that works.
Well, he's only got 2 kids, so that theory obviously isn't right.
He obviously ate too many.
He was pretty crook afterwards, and I don't think he's done it again since.
No.
But he still likes oysters.
Not sure I would.
Gayle, we're here today to talk about finance, and particularly development and project financing. Can you give us a bit of a background of yourself and how you've become a broker?
Sure. Well, I was originally with ANZ. I had 30 years with ANZ, and my role in ANZ took me through corporate and commercial banking in Sydney, and I was regional executive for corporate banking in Sydney. After that, I took a Pacific journey, and I worked across the Pacific in 10 different countries. And my last role with ANZ was CEO of the Southeast Pacific, which was 5 countries I oversaw. And I decided to take the bold step out of the secure ANZ network and set up a business of my own. Originally set it up in the Pacific, and then 12 months ago decided to do more business in Australia. And with my commercial and corporate background, it was a very good fit to specialise in commercial and development style funding.
Yeah, and you've been helping us secure funding for our project, which has been terrific having you as part of our team.
Yes, I've enjoyed being involved.
Yeah,
very much.
It was really great having you in the last meeting we had with the bank, where you pulled them up on a couple of little things in the agreement that they kind of raised their eyebrows at, that someone had picked up on them.
Yeah, well, I think this is one of the benefits, I suppose, of moving from the secure world of banking to the dark side, as they call it. I know what is a must-have and what's a like-to-have. I'm very happy to pull them up if I have to.
Yeah, well, look, as a client, it was awesome having you in that meeting and being able to keep these guys on the straight and narrow.
Yeah,
and I think that's having that very strong banking background really helps.
Yeah, exactly. And also I think just being involved with a number of different projects in Australia, but also in the Pacific, it just opens, your level of experience is bigger, and so you've seen situations and you've learned from experience how to handle them.
So today we're going to talk about funding and getting funding for development projects. So what advice do you have for developers out there that are looking to secure funding from a bank or from a lender?
Well, interestingly, I just before this podcast, I actually listened to your previous podcast with Sunhawk, and I think he actually gave some really good piece of advice. I think it is very much about the communication piece. It's getting a team of professionals working around you, and it's giving yourself plenty of time to get your funding in place, and be prepared for some twists and turns along the way. Because in the development sector, it's a changing feast in terms of lender appetite. And so you can be talking to one lender for a while, which you'll recall we did, and then we had to change tack because the lender actually changed its appetite.
Yes, it's certainly a fluid environment out there in the lending area.
Yes, very much so.
So, Gayle, every broker claims that they can secure funding for a project, but I think you really do need someone who's got a lot of experience doing that. Why is that the case?
Why is it that you need someone with experience?
Yep.
Well, I think the development style funding is not your standard residential style funding or even commercial property style funding. And I think it's not unusual for a broker to say, well, I can do this for you. And when things get a little bit tough, you find that that's not the case. But from a developer's perspective, I think the type of questions that you could ask is, okay, what level of experience have you had? What brought you into broking? What have you been doing since you've been in broking? What were you doing before broking? Do you have any clients or past clients that I could talk to confirm your level of experience? And I think also just check in on what number of lenders they have on their panel, and also check in on how the broker, I actually like to call them financial specialists, how they propose to handle the transaction. Are they just going to be essentially a commodity provider, finding the funding and then it's over to you? Or are they going to be essentially working with you right through the process in more of a relationship style arrangement?
Yes, well, which is what you've provided for us, which has been really great. And
I mean, that's, to be frank, I prefer to do that because, it builds the relationship, obviously, and it's you just feel more ownership for the whole transaction.
Yeah, and it has taken a lot longer than we probably thought it would to get the funding in place.
Oh, don't worry. It's taken a lot longer than I thought as well.
So are there any questions that you're surprised that you don't get asked by potential clients when you're meeting with them?
I rarely get asked, can you give me a name of, other clients that you've dealt with? I rarely get asked that. I also rarely get asked, how many lenders do you have access to and what is your process? And
then what are the common mistakes that you see developers making as they're applying for funding?
Look, I think it's a case of not allowing themselves enough time. It's also on occasions that the developer decides that he or she wants to go and chat to all the banks and try and source the funding before speaking to a finance specialist. Because by then, potentially it's a difficult transaction, and if they've already shopped the deal, it makes it very difficult for the finance specialist to come in and talk to different lenders. It can look as a bit of, I'm in a bit of a crisis mode. I think the lack of planning, the lack of knowing your numbers, and I know Sunhawk spoke about that, the lack of the feasibility, and just not actually have brought the team along for the journey. That's where I find that people become unstuck.
And does that happen very often?
Not too often, albeit if it's going to happen, it's more with your early developers, your first-time developers, because they don't know what they don't know. And, they may have been very strong in their particular trade and decide, okay, this is or have done perhaps maybe even some technical training and think, well, this is what I'm going to do. And as you know, what you learn from a development course is very different from what reality is.
And then why would you say a developer should go through a finance specialist like yourself than going direct to the bank?
Well, the reason for that is in the development sector, it is such a moving feast of lender appetite. And if you only go to one lender, you could have something in place. And then, 3 months before you're going to start, the lender says, look, I'm sorry, we've changed our appetite. So that puts you back to the drawing board. The other thing is by having a finance specialist, like, for example, I've got a panel of 34 lenders. Now, not all 34 lenders will do development finance, but as a result of having access to several lenders, you are more up to date with what's happening in the market, more up to date with what the lender appetite is, and you will be more aware of what is the market pricing for particular transactions.
Now, when I talk to people from the banks, they always talk about how they like to build a relationship up with you, and they have long-term relationships with developers that they've had for 5, 10, 15 years. And when I put that to you about whether that was a good thing or not, you hesitated a little bit and thought it's probably not the wisest of ideas to have all your eggs in one basket. Can you just explain that again?
Yeah. Well, the reason for that is because of the changing appetite of lenders. And you can, I am very focused on relationship banking. That's what I did when I was with ANZ, and that's the path I follow now. You can build a relationship through your finance specialist with potentially a particular lender, and that person may be very much attuned to what you want and actually buy into your strategy and your business plan. But things can happen beyond that person's control. You work in a large organisation, the top four, decisions are not made by that relationship banker. So they'll have decisions forced on them that they've then got to communicate. And I think relationship is important, but to have just one relationship, I don't think is good risk management from a developer's point of view. And it's more sector driven than anything else.
So what are the key elements that you see to a successful development finance application?
Well, certainly level of equity and level of experience. I think having a good team working around you. For example, your architect, your buyer's advocate or your sales professional, your builder, your lawyer, your accountant, and obviously your finance specialist. Having a good team working around you, having communicated the plan along the way, obviously getting pre-sales. I think being very clear and in your strategy in terms of what you personally as a developer are strong in and what you're not, and how you're going to mitigate that from the rest of your team.
And are there ways that you can structure your finances so the bank will look upon you very favourably?
Well, I think that comes back to the earlier question. I think certainly have your personal financing separate from your business financing or development financing. And I think it comes back to the level of equity. If you've got a separate income stream, that's always going to be of interest to the lenders, and just being prepared. Disclosing everything and not having something that, that skeleton in the past that you don't want to come out. Guess what? It will always come out.
And what might that skeleton be?
Well, it could be, earlier I talked about developers erring in trying to shop their deal themselves with, I've seen situations where developers have tried to shop it with, 10 different lenders. So every time there is an inquiry made of a developer, it goes on your credit file. And so having a heap of credit inquiries, even though they may not have proceeded, can actually cause a bit of a red flag from the lender. They'll say, okay, what was this about? So it's just this, or it could be something very menial that it could be a default. It could be a utility default that goes back a number of years that you've forgotten about. So it's just, in this day and age of disclosure and level of credit checking, if you've got something you're going to hide, it'll come out.
Which leads in, I was going to ask about what red flags are they looking for and how do banks go about assessing your application?
Well, you've got, obviously they'll assess the actual transaction, the development transaction, and that will come into your feasibility study, absolutely. And the professionals you've got working with you, the architect, the builder, the real estate professional, they'll look at pre-sales and they'll look at the validity of pre-sales. As you'll recall, a valid pre-sale is assessed as one that you've got 10% deposit, not 5%. And also, lenders are nervous about having too many foreign non-residents. So more than 10% is a red flag for the lender. And the reason for that is they're not convinced that those transactions will necessarily follow through to settlement.
I was going to ask about the absolute must-dos if you want to secure regular construction funding.
Business plan, communication, good team of people working around you, and demonstrated experience.
And I guess if you don't have that demonstrated experience, then you leverage off the people that you've got in your team.
Correct.
Which is what
so
I
be very
did.
clear. Yeah, be very clear where you're strong and where you're not. The first-time developers are the most difficult. You'll be pleased to know that.
I'm not taking it personally.
No, when I say most difficult to get a loan approved. And that's, again, sector-driven, because the development sector is seen by banks as being high risk. And so one of the things that lenders like to see is past experience. But how does a new developer get past experience until they do their first? Yeah? So a first-time developer is going to be the most difficult transaction to get through. And so as a first-time developer, it's important that the level of equity is strong and that you've got alternate mechanisms if necessary, and you've thought about what could go wrong and have mitigation strategies in place.
Okay, so when a developer is looking at an offering or offerings by lenders, what things should they be looking for? I know there's always the headline interest rate, but there's more to it than that, right?
Yeah, absolutely. I think certainly you're on the finance, on the actual cost of your financing, look at the total cost, because you've got, as you know, you've got the interest rate, you've got a margin, you've got a line fee. And whilst your margin could be small, if your line fee is high, and that's being charged on the full development amount, that increases your total level of cost. But as you said, it is a lot more than that. What you want to know as a developer is what process will the lender follow once you've got a loan in place. Because yes, getting the loan can be difficult and it's tedious and it's time consuming, but once you've got that in place, you want to make sure that the lender is with you in terms of timeliness of drawdowns.
And how do you ensure that, or how do you find that out?
Well, you ask the question, you get your finance specialist involved, and you are very clear on what that process is in terms of the QS involvement. Make sure the QS is involved along the way. Make sure the builder is very aware of what is required in terms of his progress claims and what the QS will need to be able to validate those progress claims. And make sure all the documentation is completed, so it's lodged once, so there's no duplication. Yes,
and a good piece of advice someone gave me was to get really close with your quantity surveyor.
Yep.
So that you've got that relationship with them and they can quickly assess claims and move them through.
Yeah, I think that whole relationship piece is important with, the whole, well, it's important in business, isn't it? But, when you think about developers, there are a number of different relationships that they need to keep strong, and the QS is definitely one.
Yeah, and I think that's one that people perhaps overlook.
Yep. They look at them as commodity providers. But, let's face it, they can cause some difficult times for you.
So, Gayle, my understanding is that the banks always like to have or like to see at least a 15% profit margin on projects. Is that accurate?
Yeah, it's that would be on the lower end. I think 15 to 20 is probably a better number, and the reason for that is it just gives you that fat if there are things that go awry, or things take longer, which they typically do. And, when you're looking at a business, if you're looking to invest in a business, that's the level of return that you would want to go into business. So if you're wanting to accept a return lower than that, there's questions.
And would the bank accept those?
They would want to understand the reasons why. Yeah.
So do they take into account that the 15% margin sort of exists in an inflationary environment of sort of, at the moment, it's sort of 4.5%, 5%. So wouldn't the overall profit margin also decrease? Or that would you have some additional margin there because of the lower interest rate?
Yeah, sure. But as we know, interest rates can change very quickly.
Yeah.
And the interest rate and development financing is bill finance, which can, so if there is a quick uplift in interest rates, it's going to flow through the bill finance very quickly. I think it's a guide, and it really comes back to, if you're in business, what level of return will you want to be able to have a sustainable business, and that will actually be able to manage the good times and the bad.
And can you just explain that bill rate for us? Because I've heard that many times before, and I think I kind of understand it, but
Yeah, well, it's just the financing mechanism that the banks use typically for development financing, and what they do is they buy bills in the market, and then they'll take off the interest margin, so you get a net amount to your account, and each roll, which could be 30 days, which typically would be 30 days in a development style transaction, the bill matures. So say it's 100,000 on the 30th of December, on 30th of March, you will have to pay 100,000, but then they'll roll another bill for 100, and so you'll get 100,000 less the interest. So you might get 95,000 to your account. So it's just a different way of funding, but it's more market related, which is deemed to be the best style of funding for development style funding.
So Gayle, developer income can be a little bit lumpy or uneven, where you get big lumps of cash every, say, 2 years or 3 years. What can a developer do to smooth out their income, or how do lenders view developer income?
I think for starters, the lenders know that it is lumpy, and this is where your margins come in as well. That is a reason for the preferred margin, because it is lumpy. What you could do, which is what Sunhawk spoke about, is in your business plan, you're always looking at your next project. All right, you're very clear on, okay, what is it that I want to be famous for? And you've got one project in place. You've got your pre-sales done, you've got the build started, you're comfortable with your quality builder, and so you're then looking for your next one. So it's about having a couple of developments in different stages. Alternatively, you could have an alternate revenue stream that you're building. Now that could be from retaining a couple of the townhouses, for example, so you've got your rental income, or it could be building another revenue stream around, managed funds or shares, or another stream to your business, whether it be, we talked earlier about this whole communication education piece. That would be alternatives that you could follow just to reduce that lumpiness. But, in reality, we know that development finance is lumpy.
And so then how do developers go about acquiring the site initially? Because usually it's easier to get residential finance to secure the property and then flip it over or switch it over into a commercial loan. Mm-hmm. So if you've kind of got lumpy income, how do you secure that second site or the next site? Yeah.
Well, this comes back to equity. For you to buy, if you've got an existing site in place, an existing development in place, and you've got your pre-sales, and it's just ticking along the actual build process. All right, that's ticking along. You then see your next site, and you say, okay, then I want to put my foot on that site. So you've got a couple of paths you can go down. A lender for a development site typically won't lend more than 50% for that.
Yep,
So you need to have a chunk of money. Alternatively, you can look at options. Some developers actually take an option out on a particular site, and what they pay for that is obviously a lot less than the full purchase price, and that will just allow you some time while the income is coming through from the other development.
Okay, and what about options for non-bank lending? Do you ever get involved in private lending or?
Yep. Yes, I do have access to, your private investors, as well as mezzanine finance and your senior debt. As you know, we use senior debt for you, but there are other options which I do have access to. They're obviously more costly.
And is that for people that maybe the margins aren't there, or they're just happy to pay for a perhaps quicker process in terms of obtaining the funding?
Well, I think it happens mostly with clients that actually don't have the level of equity. They can't actually do it themselves. So they say, okay, I've got my business plan. This is what I want to do. The margins will allow me to bring in another investor, and that investor actually buys into the strategy, and it will work. And potentially, you may see that this investor will buy into this one, and then the next one, and the next one. But it's essentially for developers that don't have the equity, and typically they will either have contacts or be able to be introduced to private investors.
If you get out your crystal ball and have a look into the future for the next 12 months, maybe 24 months, which is a long time, what do you see happening across the market from a lender's perspective?
Yeah, look, I think in the development sector it's going to continue to be quite patchy. You've got a couple of lenders that are putting their toe back into the market, the likes of Suncorp, Bank of Queensland, for example, and the likes of Suncorp. You may see them going beyond Queensland, which will be good, but it's going to be patchy, and I think there is going to be continual nervousness for inner city in all the states. So I think the outer regions are the ones that the lenders are going to have more interest in, a la your site being Mooroolbark.
Okay. And Gayle, if people would like to find out more about how you can help them obtain funding, where can they find out more about you, or how can they contact you?
Okay, thanks, Justin. They can have a look at my website. My website is stapletonpacific.com. Alternatively, my email address is Gayle, Gayle, at stapletonpacific.com.
Great. Well, I can certainly attest to the quality of service that you've provided with us, Gayle, and you've been incredibly helpful getting our funding sorted out.
Thank you.
It hasn't been a smooth process, but you've kind of been a bit of a rock through the whole thing.
Great. Oh, well, I'm pleased. I've enjoyed the process as well.
All right. Well, we might leave it there. Gayle Stapleton, thank you so much for being on the Property Developer Podcast.
Thanks, Justin. Thanks for having me.
Well, thanks to Gayle for sharing that information with you. I find understanding how funding works to be a moving feast, so having someone to stay on top of it for you and help you with it is invaluable. Getting your financial affairs in order and keeping them that way will help you to continue delivering successful developments. Here's 3 points I took out of our conversation. 1. Ask questions of your finance specialist. Gayle mentioned a couple of good questions to ask, such as, what level of experience have you had? What have you been doing? What brought you into broking? And how are you going to handle the transaction? Will you continue to help us through it, or just introduce us to the lender? And how many lenders do you have access to? Gayle said she is surprised how rarely she gets asked about other clients she has worked with. This is a great way to establish credibility and whether or not your finance specialist has the relevant experience and provides a good service. So, like most things in developing, you need to ask the right questions. 2. Allow plenty of time to get your loan sorted. This is one I have recent experience with. It always takes longer to get your loan sorted than you think it will. We thought it would take 6 to 8 weeks. Well, it took way longer than that. And this is where your finance specialists can help you identify and gather up documents that you will need to submit with your application, and also help push things along with the lender. Depending on the size of your loan, you may also be dependent upon valuation and quantity surveyor reports, which could take several weeks before the bank will even begin to progress your application. 3. Make sure you are operating with a profit margin the lender will be comfortable with. This seems to be a bit of a fuzzy line and may be dependent on the value of your loan. I was taught that lenders pretty much demand a 15% margin on a project before they will loan you money, but it seems that figure may actually be higher. I know this can be hard to achieve in certain areas and on certain projects, so it may be worth discussing this with your finance broker to see what you need to do. Obviously, if you have good equity, it can change up the numbers, so it depends on many factors. If you have any finance questions you would like answered, please post them on the Property Developer Podcast website, propertydeveloperpodcast.com, under this episode, and I'll see if Gayle can answer it for you. That's almost it for today. I'd love it if you could take the time to head over to iTunes and rate the show, or drop by the website for all the past episodes and leave a comment. Until next time, may all your project profits be above 15%.
You've been listening to the Property Developer Podcast. Tune in next time for more tips, ideas and inspiration to take your developing to the next level. For more developing love, make sure to visit propertydeveloperpodcast.com.